Okay. Good day, viewers. My name is Oloyede Abimbola. I'll be your host today on today's Morning Talk World Series. And today is another wonderful day. Today, we're going to be talking about savings and retirement planning. And before we move further, please don't forget to hit the like button and subscribe button. Today, we're going to be talking about a very important topic because every day 10,000 people retire from active workforce in America. And because of that, a lot of people retire and figure out that they are not in the right place financially and they get into a financial crisis. Well, today we have a fantastic and seasoned financial professional all the way from the state of Maryland. I'll be introducing it to you, Ms. Nelda, who is a financial professional and an entrepreneur. Welcome, Ms. Nelda. Welcome, Ms. Nelda.
Hello, good morning, everyone. Good afternoon, good evening, wherever you are in the world. I just want to thank you for this great opportunity, Mr. Oloyede. This is a wonderful and this is a great topic that you have actually brought up, retirement and savings. I just want to introduce myself a little bit. My name is Ms. Nelda, and I am a licensed financial professional. And I got into this field because finances is something that was not taught to us growing up. We would just thought go to school, get a good grade, get a good job. But we weren't talking about how to save and how to properly plan for retirement. So when I came into this information, the future, and like Mr. Oloyede said, this is a big crisis and a big problem because many people retire and realize that they can't even retire. That's why you see a lot of older people going back to work in directing that were many people. And I'm happy that you're able to give me this opportunity and this platform to speak to people, to educate people, to teach them, to show them that there are ways that you can better plan so that way you don't have to run into these circumstances when it to thank you for everyone who joined. I pray the information touches you. I pray that this information is useful to you. Back to you, Mr. Oloyede.
Thank you so much, Ms. Nelda. I really appreciate that. And today, our viewers are going to be listening a lot to what you have to say as regards the importance of financial planning when it comes to savings and pretty much retirement. And what is a lot more important about this conversation today is we'll be looking at the patterns and what are people really doing wrong? Why are they not really getting the right information? And because of that, that will be a lot of eye opener to us to really look at what are the best measures and best ways to go about it in order to prevent certain patterns from happening when it comes to issues of retirement planning.
Yes, Mr. Oloyede. Well, the key really to this is financial planning. And what we know is that financial planning has stages. Sorry, everyone, 1 second. There are stages of financial planning. Sorry about that. There are stages of financial planning, and you have to understand these stages of financial planning in order to better plan for your finances. And these stages are, we have what the first phase is the accumulation phase. And the accumulation phase, this is when you work, or you're actually working for money, or you have your money working for you. Now, everybody is trained to work for money. So we know how to work for money, and we're told to save, to put money in the bank and stuff. So this is the phase that you work. But the part that a lot of people are not educated on is that they don't have their money working for them, because you want to have it both ways in order for you to be able to properly retire. Because if anything happens to you, because this is the largest phase in financial planning, really, because this is the part where you work for years and you save and you try to prepare. So if in case for some reason this process is interrupted where you can't work, you want the other aspect to be working for you, where your money is working for you. So that's why the thing is, most people sometimes is they are working for money, right? But they don't properly plan for when their money will work for them. All right. And so now when something happens to them, then their accumulation of money is interrupted. The second phase is what? The protection phase. where you have your money actually matters. Is your money protected? Is your money going to be there when you're ready to retire? That's a big issue. And then the last phase of financial planning is what? The distribution phase. When I'm ready to collect my money, is my money going to be all for me, or do I have to distribute my money over different individuals or different entities? So you want to make sure that you properly plan. So you're looking at your accumulation phase, you're looking at your protection phase, and you're looking at your distribution phase. So over to you.
Well, that's very interesting there. I like the way you actually broke it, Miss Nelda, because looking at the distribution phase, accumulation phase, and that's what a lot of people don't understand. If it's not how much money you earn, is how much you keep, right? So over the period
Mhm.
of time, you live every day, you understand
Exactly.
that budgeting comes into play, planning comes into
Yes.
play, and for every amount of earnings, whether business or personal earnings, there's a fracture of it that has to go into, with an understanding of what you say, a fracture
Yes.
of it has to go into this different stages, right? And that's very important. So, Ms. Nana, what will you say also about someone who actually, um, maybe is self-employed, for example, who doesn't have an experience with money?
Mhm.
What advice would you really give? I mean, how will they go about it when it comes to ending this crisis of falling into the pitfalls of after retirement, and I figured out that all these years I never really knew about money. What will you say about that? Over to you, Ms.
Yes, for those that are self-employed, the key is also, like, we have three phases of income generation. I usually like to go to this, tell people about the cash flow quadrant, because the employment side and the self-employment side, that's where the majority of the population lie. So they said only 95% of population only controls 5% of the wealth. And then we have the business side and the investment side. And it says that's where 5% of the population control 95% of the wealth. So with that in place, it's like when you are in self-employment, you have to look at how am I generating my income? And am I in a position where only generating income? The work is not only what they call linear income. That means you're trading time for money. I work to get paid a certain amount of money. So if you're not able to work, then you don't get paid. But what people fail to realize is you also have other two aspects of income generation, which is leverage income. The second one. So it's like, are you leveraging your income? And then the last one is residual income. Leverage income is you build a team. You have people working for you. So if you are not able to work, you're still going to be able to generate income. And then for residual income, you do something one time and you continue to get paid with it. So a lot of people, they know about linear income where you trade time for money. But unfortunately, they don't know about leverage income and residual income, where you can actually now build a team, build an organization, and produce services that no matter what, once you have gotten paid, you continue to get paid from it, regardless of what the work that you're doing. So people have to know, don't only just focus on the linear income, but also now work towards building leverage income, which is building an organization. So that way, even if you're not there, money, you'll still be making money, money still coming into your account. And then residual income, you do work one time and you're able to get paid continuously for the work that you did that one time. So people have to understand those different aspects of income generation in order to be able to really truly have that savings and build wealth and properly plan for retirement. Over to you.
Wow, wow, wow. I'm so inspired the way you broke down the quadrant, and that's fantastic. That's very inspiring. And also, and listen to different types of patterns, ways in which you can
Mhm.
actually generate income. So back to retirement and savings, right? I know out there are so many different kind of employer, government sponsored savings plans. I've seen a lot of limitations. Some actually they tell you, okay, there's an age limit for some, there's a contribution limit for some, there's an income limit for some, there's the tax consequences, and for some they actually have your whatever had an income you have exposed to
Mhm.
market risk. What do you have to
Mhm.
say about that, and what are the alternative out there when it comes to those
Yes,
kind of portfolios?
absolutely. And for you to properly understand that concept, you have to know there are three rules of money, right? we have the rule of 72. And this rule is a rule of compound interest. Compound interest just basically means how long it would take for your money to double based on the interest rate of where your money is sitting. So that's rule. You want to make sure that wherever you're putting your money or you're saving your money, you want to make sure that the interest rate is high enough to outpace inflation, because that's when your money will truly be working for you. Because inflation averages about 3%. I mean, I know 2 years ago inflation went up to about 7%. So wherever you're putting your money, is it outpacing inflation? If it's not outpacing inflation, then really your money is losing value. So that's one aspect. You have to know that this first rule. So wherever I have my money, what is the interest rate and how long would it take for my money to double? You want to know that information. The second one is, how does your money grow? We actually have three sectors in the financial industry. We have the banking sector, we have the investment sector, and we have the insurance. So the banking sector, definitely your money will be protected because you're putting your money in the bank in a savings account. But banks usually give you what? About what? Less than 1%, or sometimes maybe they can go up to 2% depending on the type of account. But that money in the bank is not outpacing inflation. So that means your money actually sitting in the bank is losing value. It's just there for safety, but your money is not really working for you. Then other people, they're like, okay, well, the bank, since it's not really giving me what I want, they go into the investment sector, which is what? The stock market. So you're going into the stock market because you want to get what? High interest rates. So you want to get high interest rate. But the unfortunate thing about the stock market is that you are taking a risk, because you can make money today and lose all your money the next day, which is what happened to a lot of people when we had the 2008 crash, stock market crash. A lot of people lost a lot of their investments. They lost a lot of their retirement accounts. So you don't want to, so it's like you're gambling literally with your financial future. And then the last part is insurance. And insurance actually, like a lot of people, when they think about insurance, they just, they're like, oh, it's just homeowners insurance. But what people fail to understand about the insurance industry is that insurance is protection. So that's why banks, whenever they give you a loan, right? When they give you a mortgage, they said, make sure you get what? Homeowners insurance. Before you sign all your papers to receive the deeds of the home, you have to get what? Homeowners insurance. They make us to do what? Get car insurance, right? So that way, before you drive out, you have to make sure that you have what? Car insurance. So if the government is protecting themselves, the banking industry is protecting their investment with insurance, why are we not also utilizing insurance to protect ourselves and also our finances? Because that industry is actually protection. So, and then what you have to do is, in the insurance industry, you also have to know which type of policy you're using, so that way, depending on what you're trying to achieve. Are you trying to achieve money, like building cash value? Are you just trying to achieve to have an account, that would, that you can have that, just, a stable and steady account? So you have to really determine, what am I trying to accomplish with this account? Then you will know what type of account that you actually will best suit your actual financial need. So we have that. And then also the last part of this is how money gets taxed, because you want to make sure that when you're ready to get your money, Uncle Sam does not come for majority of that money, because that's what they do. They come for the money that their share of the money. And that's what happens with a lot of our government retirement plans. They say pre-tax, but in the end, when you're ready to get your money, then that's when you receive the taxes from Uncle Sam. So you want to make sure that, am I going to be able to keep majority of my money? And usually in the banking sector, your money gets taxed yearly. So whatever little interest you make on it, it gets taxed. But when you're ready to receive what, it gets taxed. And then in the tax later account, which is the insurance, so what happens is that you get taxed in the beginning. That means on the small, the little, and then your money grows tax-free, and your money, you can pull it out tax-free. So you have to know, what risk am I willing to take? Now, some people, they don't have a choice as to getting a government retirement plan, depending on the job that they do. But at the same token, it's like you want to have that and then have a backup for it, just in case, because your money as a government retirement plan is still at risk because it is in the stock market. And then the accounts that people use for their kids to plan for college, the 529, that's also in the stock market. So you want to make sure that, if you're taking a risk, you have a backup. So that way you have something that in case this doesn't work, I already have this in place. So people have to have this knowledge in order to be able to better plan. So that way you're not hit with eventualities. You're not hit with the unexpected when things happen. And then now you're wondering, like, what am I going to do? How am I going to handle this situation? So that's what I said. So everybody, you have to take a look at all these different things to make sure that you're properly planning for your future and you understand what it is. That's why we make sure that we're educating people so that way they know when I'm getting this account, what the account is giving me, what it's not giving me, so that way I know for myself and I know how to better plan for for my future. Thank you, Mr. Lee.
Wow, wow, wow. That's interesting, Ms. Nelda. You actually really made an outline of so many things I've almost constantly had conversation about with people. And oftentimes when people come to me, they'll be like, two questions. This is just very common question that I actually get I'm being asked most times. And the first question is, who needs retirement actually? I mean, what category of people need retirement? So people are like, oh, I don't need a retirement at this time because they don't want to think about it, right? But who needs retirement, and should we teach our kids, or of course, or should we teach the generation behind the best retirement practices? Because going by the days, we had a lot of institutions having all these pension plans and all that, but a lot of things have changed, and now we have employer sponsor plan like the 401k and all that actually don't give the guarantees that are offered by pension plans are most of the times probably invested in equities and all that. Now, the thing is, times are constantly changing, and the question is, who needs to be taught retirement? I believe everybody needs to be taught about retirement because at one time we are going to, fall into that bracket. And somehow, if you ask me when is the future is like the next hour, tomorrow is right here already, right? So you talked about the different retirement plans, and you talked about the importance of accumulation. In the last few minutes, you've talked about so many topics. Now, this is just something which happens after retirement that a lot of people might not realize, right? There's an escalating cost of housing and healthcare. So what it means is that at the point of retirement, if you're not considering it and you're not planning towards it, it gets to that point whereby the cost of housing hits you, the healthcare becomes more expensive, and also one very important part to put into consideration is the long-term care.
Yes.
Yeah. I mean, do you want to just talk about that a little bit? Because, of course,
Absolutely. And I mean, long-term care, like a lot of people, like they think long-term care is just for seniors. And it's long-term care is a great thing to have when you're retiring. But unfortunately, long-term care is expensive, very expensive for you to be taken care of. So this long-term care insurance is something that you definitely need, especially getting older. As part of your planning, your retirement planning, long-term care has to be included in that because a lot of times, a lot of seniors are not able to afford long-term care services, so they end up having family members taking care of them. And this is really like you put a burden on the family members to constantly like give you round-the-clock care when you can actually have a professional doing it and then getting paid for it. But the thing is, people don't plan for it. And that's why a lot of seniors, when they get to that stage, because they have Medicare, but Medicare can only cover so much, and Medicare has limitations. So it's like you need something else. You need additional something in order to be able to better take care of yourself. So long-term care insurance is actually very needed. But one thing people have to understand is long-term care is not just only for seniors. If you are not able to do 2 out of your 6 activities of daily living, you qualify for long-term care. But now, have you planned for it? You can have long-term care as a standing insurance by itself, or you can have long-term care attached as a rider in an insurance policy. So that way it can take care of you while you're not able to take care of yourself until you get better, or when you're in rehab, or when you have to, you need those services to be able to take care of yourself. So one thing people, the misconception people think is long-term care is for when you're older. No, long-term care is needed whenever you cannot do 2 out of your 6 activities of daily living. And that can happen at any time. Anyone can have an accident and not able to take care of themselves. What do? You need those services. How do you pay for it? That's when long-term care service insurance can kick in and help you in those circumstances.
Well, thank you so much, Menzelza, for that.
Yeah.
And it's interesting to know that a lot of what you've talked about
Hmm.
are products and services offered through insurance company.
Yes.
So a lot of people like, I don't like the insurance company. But guess what? Do you like the products and services? Because if you have a protection for
Hmm.
yourself and you have a protection for your finances and you
Yes.
have a protection that gives you coverage if
Yes.
anything happens in the course of your life
Yes.
or while you're alive and
Hmm.
you're able to get the right care financially because financial stress is real, right?
Yes.
So looking at all these different features
Yes.
they're actually being offered, through the insurance our partners, well, of course, our insurance companies. If we look at it in all perspective,
Hmm.
it's great. It's
Yes.
great to have it
Yes.
because, of course, when we have it, we can sleep at night knowing that
Exactly.
whatever happens, I'm protected, right?
Exactly. I always tell people it's better to have it and need it or not have it. And that's the thing. A lot of people are more reactive than proactive, and we have to make sure that people become proactive. And that's the purpose of insurance. Insurance gives you that proactive, makes you proactive, so that way now, when things happen, you're better protected and also you're better prepared for whatever the unexpected. So yes,
Absolutely. I mean, we've
yes,
been having a great time, and not just having a great time, and no, we've been learning a lot today. And I hope our viewers, our audiences are also learning. You should. I just like to tell everybody you should continue to subscribe to this channel because we will keep bringing you resourceful information that can help you make better informed decisions about money and your financial future. Right. Because the goal of it is to educate everyone out there on the importance of these different topics we talk about and the patterns that you should avoid so you don't fall into financial pitfalls. So I would like to thank you, Ms. Nelda, for coming out today on today's live. And I would like to ask you, this is a question. I mean, where can the viewers find you if they want to
well,
get you?
I can give my email and my phone number, my business
Okay.
line, so they can reach me. Because I normally do financial education courses to just educate the public, educate the community. So for my phone number, I can read it out. Give me 1 second.
Oh, okay, sure. So Mr. Nada, I'm going to be putting that on the show notes definitely, so our viewers can also see that, and they can touch base with you, of course, connect with
Yes,
you. I know a lot of people would like to have more information about what we discussed today, and pretty
absolutely,
much we are constantly looking at how we can improve the life of our society, our community at large.
absolutely. Yeah. So my number, my business line, you can reach me. It's 240-726-3917. And my email is kfim633@gmail.com. So you can reach me there, and then I can give you more information on the when we have the trainings, when we have the education seminars on Zoom, and we have them virtually. So it's easy for anyone to join. But you can reach out to me, and then I'll be able to send you the link so that you can join one of our seminars and get educated, because that is the key. That's what me and Mr. Louis are here for to do, is make sure that
Yeah,
people, families are getting educated, so that way they can better plan for their financial future. We don't want people getting to
absolutely.
those stages in life and then they are worrying, they are stressing. No, at that stage, you're supposed to be relaxing and you're supposed to be comfortable in yourself and know that you are completely taken care of. So we want people educated because we are working hard. So you don't want to work hard and then down the road, you're not able to actually relax and take care of yourself the way you need to. So thank you, Mr. Leah, for this amazing opportunity. I hope that your
Thank you.
viewers got some information out of today. Thank you for bringing me onto your platform and exposing me to your viewers. Thank you, and over to you, Mr. Lee. Thank you again.
Absolutely. Thank you so much, Ms. Nelda. It was a pleasure having you. And hopefully we're gonna have you again and again so we can continue educating our viewers about the importance of what we do. I'd like to thank every viewer who actually tuned in today. Don't forget, like the subscribe button and subscribe also. And we'll be seeing you on the next session of Money Talk Workshop. Enjoy your day. Bye for now.